Welcome back to The Explainer. So, if you've been keeping an eye on the markets lately, you've probably noticed a truly fascinating situation developing with one of the most famous companies on the planet. We're looking at the ultimate paradox of Apple's latest quarter. I mean, on paper, the numbers are absolutely staggering, yet beneath the surface, there's a very real, very palpable anxiety brewing among investors. Today, we're going to break down exactly what's happening.
$109.4 billion. Wow. I just want to pause for a second to let that massive revenue number breathe. Think about the sheer scale of that. Apple didn't generate that over a year or even half a year. That monumental figure was generated in just 3 months, a single quarter. It's wild.
And the surface-level blockbuster metrics? They are phenomenal. Revenue overall was up 16%. Net income reached roughly $29.8 billion, which is a 27% increase year over year. Earnings per share, or EPS, surged 29%. But pay special attention to the iPhone and services lines. The iPhone alone brought in $54.25 billion, growing 22%. Services jumped 31%. When you evaluate results like these, they seem almost impossible to criticize, right? They're incredibly strong.
Which brings us to the absolute core mystery of this explainer. With numbers like that, why on earth is Wall Street worried? Why isn't everyone popping champagne? Well, it all comes down to a fundamental shift in how the market views this tech giant. At Apple's current scale, great results just aren't enough to satisfy investor expectations anymore. To really understand why, we have to look at the unique problems that come with being the biggest player in the room.
Section 1. The limits of scale. Growing from huge. You see, Apple is entering a totally different phase of its corporate life, where its own past success is actually its biggest hurdle. They've reached a scale that is genuinely difficult to even comprehend. At points, the company's been valued at over $5 trillion. Back when Apple was smaller, they could grow incredibly quickly simply by expanding into new geographic markets or, rolling out the iPhone to new carriers. But they can't grow like that anymore because they're already everywhere. Think about it. How many people do you know who don't already have a smartphone? Market saturation is a reality they just can't ignore.
But of course, Apple knows this. So to counter that saturation, they've built this incredible safety net. From iCloud and the App Store to Apple Music, Apple TV Plus, Apple Pay, advertising, and all their various subscriptions, the ecosystem is massive. We're all pretty attached to our iPhones, and selling you that hardware is a huge one-time transaction. But these services, they use the phone to lock consumers in, generating recurring cash flow. This services sector alone generated $30.74 billion in the quarter. It's a remarkably powerful business model.
But here's the friction point. Investors are famously forward-looking. They aren't looking at the brilliant ecosystem Apple has already built. They're demanding to know what's next. They want to know how a giant of this magnitude can possibly keep growing at the double-digit rates that justify its massive valuation. And the answer to that question rests heavily on one specific technology.
Section 2. The AI upgrade cycle. The make or break catalyst.
Artificial intelligence is the wild card here. It's the variable that could trigger a massive new wave of purchases. But let's define exactly what Apple is doing here, because it's unique. Apple Intelligence is their initiative to put AI directly into your devices as a personalized, intelligent assistant. Unlike competitors like NVIDIA, Microsoft, Alphabet, or Meta, who are all racing to build and sell the massive underlying AI infrastructure and cloud software, Apple's got a totally different strategy. They need to figure out how to put AI directly into the devices people already own. Imagine an iPhone that seamlessly understands your schedule, your photos, and your messages, acting as a true assistant. It's an enormous opportunity.
But it leads us to a pretty pressing question. How long can the iPhone realistically continue driving double-digit growth? Consumers, maybe even you, are holding onto their devices for 3, 4, or even 5 years now. Those new phone prices can bring some serious sticker shock, right? So Apple is under immense pressure to prove that the next iPhone isn't just a little bit faster, but is significantly smarter. If users don't see Apple Intelligence as a necessary, life-changing feature, they simply won't upgrade. And if they don't upgrade, Apple faces a much harder growth environment.
And this actually leads to another massive hurdle, the sheer cost of innovation.
Modern smartphones require advanced displays, custom processors, memory, cameras, storage, and now the wildly expensive semiconductors and infrastructure required to support AI. Component costs are rising across the board. If these prices rise faster than Apple can offset them, either through raising prices on us, finding efficiencies, or negotiating with suppliers, their profit margins are going to get squeezed. And if profitability deteriorates, Wall Street will absolutely punish their valuation, even if overall revenue goes up.
Section 3. The 2026 Leadership Transition. Passing the baton.
Now, what's really interesting here is the massive psychological hurdle hanging over Wall Street right now. It's the end of a monumental era. Tim Cook became CEO in 2011. Over more than a decade, he oversaw an era of massive ecosystem expansion, building out that huge services business and rolling out Apple Silicon. But this era is coming to a close. On September 1, 2026, John Ternus, who has been deeply involved in Apple's hardware and product development, is scheduled to succeed as CEO while Tim Cook transitions to executive chairman.
Now, because Ternus is an insider, Wall Street isn't worried about Apple surviving. They know the company is incredibly stable. The real question that makes investors anxious is this: can the next generation of Apple leadership actually create the next major growth engine? Tim Cook built an extraordinary recurring revenue machine. Investors just want to know if John Ternus has the vision to invent the next massive catalyst that will propel the company forward for the next 15 years.
Section 4. Bull versus bear. The market expectations.
So how are the financial markets actually weighing Apple's future? Well, the optimists rely on what we can call the rule of 5. First, the ecosystem lock-in. It's incredibly hard for a user to leave Apple once their photos, apps, and devices are all perfectly synced up. Second, the ongoing, highly profitable services growth. Third, the massive AI upgrade potential we just talked about. Fourth, unparalleled financial strength and cash generation, which lets them buy back shares or invest heavily. And fifth, unquestionable global brand power. The bullish view here is that Apple doesn't need to completely reinvent itself. It simply needs to successfully extend this powerful ecosystem into the AI era.
But you really have to juxtapose all that optimism with the bear case. Pitted against ecosystem loyalty, recurring services revenue, and unmatched cash generation is a massive valuation problem. Add to that the risk of falling behind faster-moving competitors in AI, a heavy dependence on the iPhone to drive literally everything else, and the uncertainty of a CEO transition. The biggest risk here isn't that Apple collapses, no way. The bear case is that Apple simply becomes a great company that delivers an average stock return because its hyper-growth days are officially behind it.
Section 5. Competing with Apple. The final verdict. Bringing all these elements together, the massive revenue, the AI challenge, the leadership shift, and the market expectations, it brings us to a simple, undeniable truth. Apple doesn't get measured against ordinary companies anymore. It gets measured against Apple. The market has already seen them cross extraordinary valuation milestones, totally revolutionize the smartphone, and build a massive services business. That is a brutally high benchmark. The stock market isn't pricing in the brilliant things Apple did yesterday. It is entirely focused on pricing in Apple's future, wondering if they can clear their own incredibly high bar. Which leaves us with this final thought to ponder. At Apple's size, the hardest part isn't becoming bigger. It's staying extraordinary. Apple just posted a jaw-dropping $109.4 billion quarter. They've got the cash, the talent, and the brand. But conquering the legacy of their own past success and convincing the world they can still create the future, that will be the ultimate test of their next chapter. The real question is, will their next big leap be enough to convince you to upgrade, or has the tech giant finally hit its ceiling? Thanks for joining me for this explainer. I'll see you next time.